And here's something almost nobody is talking about: on-chain data. When we zoom into Bitcoin's network, we see that the number of wallets holding at least one full Bitcoin has been steadily rising. These so-called whole coiners are at an all-time high, and historically, when long-term holders keep accumulating, it creates a supply squeeze that fuels massive rallies later on. Even better, exchange balances keep dropping. That means fewer coins are sitting on centralized exchanges, and more are being held in cold storage. This is a sign of strong conviction. Traders are not preparing to sell, they're preparing to hold. Now, let's talk about sentiment. Despite Bitcoin sitting near record highs, social media data shows that interest in crypto, or Bitcoin, is still far below the mania levels of 2021. Google Trends, Twitter activity, even Reddit threads, they're not showing peak euphoria. And what do we know? Markets don't usually top when nobody's euphoric. They top when your Uber driver, your grandma, and every celebrity is talking about Bitcoin. We are nowhere near that level yet. But here's the big picture. Macro liquidity. The US Federal Reserve is preparing for interest rate cuts, likely starting in September. History shows us that whenever liquidity increases, when money gets cheaper, risk assets like crypto absolutely thrive. In fact, there's over $7 trillion still sitting in US money market funds. That's basically cash on the sidelines, waiting. Once rates start falling, that money is going to chase higher returns. And guess which asset class benefits the most? Exactly Bitcoin, Ethereum, and high-cap altcoins. Combine this with global liquidity signals like the M2 money supply, which is already turning back up after a temporary slowdown. Every cycle before, this has been one of the strongest indicators for crypto rallies. So let's recap the bigger picture. On-chain holders are stronger than ever. Sentiment shows we're not at peak hype yet. Trillions in liquidity are about to re-enter the system. All of these factors point to one conclusion. This bull market isn't done. In fact, it may only just be getting started. So the question is not if crypto will keep running, it's whether you'll be positioned for it. Are you thinking about selling your crypto before the year ends? With all the market noise, it's a tempting thought, but don't be too quick. A lot of people are calling for the top, but the data suggests this cycle still has a lot of room left to run. I'm going to give you 9 strong reasons why this bull market is far from over, and the last one might surprise you. So watch until the end before making your decision. In the past, Bitcoin and altcoins pumped mostly on hype. People weren't buying because of real use cases, but because they thought prices would moon. This time, things are different. Decentralized applications are now generating hundreds of millions in real revenue from fees. This isn't just a future promise, it's cash flow. Solana alone captured more than 40% of that activity recently. That means tokens aren't just speculation anymore, they're backed by actual business models, and that makes the foundation of this cycle much stronger. Another big reason is regulation. A few years ago, regulators were trying to shut crypto down. Now, the opposite is happening. Bitcoin ETFs, led by giants like BlackRock, already hold more than 6% of supply, worth over $150 billion. The European Union has fully rolled out its MiCA law, providing a clear legal framework across 27 countries and forcing exchanges and providers into compliance. In the UK, retail investors are once again allowed to buy crypto investment products. Institutions love clarity, and when the rules are clear, the big money flows in. Stablecoins are also exploding in importance, acting as the digital dollars that power the ecosystem. The Genius Act in the United States didn't just approve them, it made them mainstream. Stablecoins need smart contracts to exist, which means chains like Ethereum, Solana, and even Tron will see constant baseline demand. Every time a stablecoin is minted or moved, gas fees are paid. That guarantees activity on those networks for years to come. It's not just investors buying crypto anymore. Big tech companies are actually building. Stripe, Circle, even Google are working on their own blockchain networks, integrating crypto into their core services. That's trillions in capital and top engineers moving into the space. When traditional giants start building infrastructure, it signals that the cycle isn't slowing down, it's accelerating. Meanwhile, the US economy is holding up strong. GDP is growing, unemployment is low, and manufacturing is expanding. A healthy economy means a higher appetite for risk on assets like crypto. On top of that, Bitcoin is once again outperforming gold. In 2013, 1 Bitcoin was worth just 1 ounce of gold. In 2017, it was over 15 ounces. In 2021, it reached nearly 40. Every time Bitcoin breaks the old ratio against gold, it enters price discovery. That's when we see explosive moves higher. Don't forget about the upgrades. Ethereum is preparing an efficiency upgrade for validators, and Solana's Fire Dancer update could process up to 1 million transactions per second, more than all major credit card networks combined. These improvements mean the networks will be ready to handle massive new demand once stablecoins and institutions pile in. Crypto lending is another growth area. Institutions are now treating Bitcoin and Ethereum as legitimate collateral, which locks up supply and increases capital efficiency. Lending already peaked in 2021, but by 2025, the market is expected to be several times bigger. That means billions in new liquidity entering the ecosystem, creating deeper, more stable markets. This fresh capital isn't just sitting on the sidelines. It's actively fueling more growth, funding new projects, and building out the next generation of decentralized infrastructure. Then there's sovereign adoption. It's not just El Salvador anymore. Bhutan still holds around 11,000 Bitcoin, equal to nearly half its GDP. The Philippines is working on a bill to buy 10,000 Bitcoin for a national reserve. Brazil and Japan are openly discussing their own strategies, and even the United States has passed its first Bitcoin reserve bill. When countries start stacking sats, the game changes completely. It legitimizes the asset on a global stage and creates a powerful new class of long-term holders who are unlikely to sell, permanently reducing the available supply on the open market. And here's the most important reason of all. Despite Bitcoin sitting at all-time highs, social sentiment is flat. The conversations are more measured, focused on technology and long-term value rather than Lambos and moonshots. There's no mania, no frenzy, no flood of TikTok influencers telling everyone to buy. Markets never top when people are bored. They top when everyone believes they're getting rich overnight. That mania simply isn't here yet. So to sum it up, from regulation and stablecoins to sovereign adoption and network upgrades, crypto is stronger now than ever before. Yes, the cycle will eventually end, but looking at all the evidence, we're not there yet. The question is, will you ride it or sell too early? But let's dig a little deeper. Beyond headlines and hype, the real story is written on-chain. Blockchain data doesn't lie. Right now, we're seeing record numbers of long-term holders. Wallets that haven't moved their coins in over a year are at all-time highs. Exchange reserves keep dropping, signaling that more investors are moving their assets to cold storage with no intention of selling soon. Network activity is also quietly surging. Transaction counts, active addresses, smallholder wallets are steadily climbing. These aren't the signs of a market top. They're the signals of quiet, organic growth. Meanwhile, macro liquidity is quietly fueling the fire. Central banks around the world are loosening monetary policy, injecting fresh capital into global markets. This isn't just benefiting stocks, it's creating a tide that's lifting all risk assets, including crypto. And sentiment, still cautious. Funding rates are low, leverage is muted, and Google searches for Bitcoin are nowhere near previous peaks. The market isn't euphoric. It's patient, building a foundation for whatever comes next. So while the narrative might feel subdued, the data beneath the surface tells a different story. The next move won't be driven by hype or headlines, but by the steady, unstoppable march of on-chain adoption and global liquidity. Are you watching the signals or just the noise?